All right, everyone, if you've watched my videos, if you've listened to the podcast, if you've been on pre-market prep, you know I kind of get a little OCD about follow the plan, follow the plan, follow the plan. I go over it over again, and I hammer home sticking to your plan. But sometimes the old Mike Tyson quote comes into play, everyone has a plan until they get punched in the face. Today I'm going to talk about the times when you need to take into consideration what's happening after you enter the trade to maybe bail and exit that plan early. Hey everyone, before we get started, be sure to like, share, subscribe, and if you're on YouTube, ring that bell to be notified as soon as we drop a new video. We do so much on the channel. I want you in the know. I want you there. I want you getting better, smarter, faster, stronger every single day. All right. So again, just a review from the introduction, I'm always talking about clearly defined entries, exits, stops, having that plan, something I say over and over again. If you're in a trade and you don't know what to do after you entered that trade, okay, you put your money on the line and you don't know what you're going to do, you screwed up. Okay. I think of it, many of you might know, might be familiar if you've done some basic coding to like an if then else statement. That's how I think about a trade. Okay. It's like an if then else statement, and there's a workflow, and ultimately, and I'm talking once you're in it. Okay. Once you're in it, there should be very little decision making. You should be making all the decisions, doing all the analysis before you enter. I mean, that's one of the biggest mistakes so many newer traders make. They see some stock moving, they see it mentioned on Twitter, they get some alert, they see it in a chat room, they get FOMO, and they get in. Then they start thinking, oh, now what's my stop now? What's my goal now? What do I do if this happens? What if I do if that happens? You screwed up. You blew it, okay? Seriously. If you don't know what you're going to do after you're risking your money, listen, you can be undecisive before you press that buy or sell button, and you can spend your time to think through it, have your process. I talk about the worksheets all the time. There's a time to be indecisive. There's a time to have unknowns and work through variables. That's before you enter. Afterwards, it should be set in stone, and you should just follow that plan. That being said, what's the theme of the video? When to break your plan. Okay. So what I'm talking about typically is, ultimately you make your plan, you have your goal, you have your stop, and a lot of this is time-based. So like for the sake of this video, I'm going to kind of talk about a day trade. And let's say you're talking about a trade and you entered into the 9:45 window. And, that I talk about one of the best times, 9:45, 2 p.m. are our favorite times to enter these short-term day trades. And here you are, it's noon, it's 1 p.m. I mean, just not much going on. And it's like, ultimately, I talk about mental capital. A lot of people talk about mental capital, whether that be anything, relationships, investing. I mean, you only, as a human, you only have so much brain power. You only have so many hours in the day. And if you're in a trade that's just doing nothing, ultimately, hasn't hit your stop, hasn't hit your goal, two things. It's burning up, your time, your energy, your thought process, because you're sitting here and you're watching this thing do nothing. So, and then all of this, listen, I know when that happens, I start feeling tired. I could have a great night's sleep. I could get the workouts in. I could have my nutrition on point, and all of a sudden it's like 12:30 and I'm tired because it's just draining the life out of you. And then again, to me, it ends up costing you opportunity as well. I mean, you'll hear about opportunity cost because now you're staring at this stock and you miss a better play. So that's where I talk about, no follow through, especially like traction on the news. So a lot of the stocks we trade are news related. We're looking for whether they drop earnings, they got a new product, etc. And you buy that big break and you got a good entry. Again, maybe you nail that morning move and you're up a little bit, or maybe you're flat or you're slightly down. But listen, if it's a 9 a.m. PR, which we love, we love those 8:30, 9 a.m. PRs. if there's no follow through by noon, 1 p.m., you're probably just wasting your time, burning your mental capital, and burning opportunity cost ultimately. So I know a lot of you like, distinct answers. I don't have it's not like I could say wait an hour, wait 2 hours, wait 2.1467 hours. But ultimately, at some point, if you're just I think it's almost an experience and an emotion type thing. But if you're just it just feels draining. Back to my example. If it's 12:30 in the afternoon, middle of the day, you're wide awake and you're feeling drained, I think that's time to exit the trade, because it's just your brain is telling you something that you saw an opportunity, you saw the news, you interpreted it, but it's not following through. So time, no traction on the news. Other thing is, that failed breakout. I think of OPAD was one this morning. This thing right now, failed breakout. This is a recent SPAC, huge breakout this morning. You can see it broke out to all-time highs this morning. And, right here, broke the pre-market high, which is that level we look for at 11:05 a.m. at 1850. And it spiked as high as 1950 and then just slammed back. Now, it held VWAP, but to me, that's a failed breakout. Now, you might look and be like, well, Tim, it went all the way to 2087. But 2 red 5-minute candles in a row, understand the 5-minute candle theory, and it just immediately slammed back. I mean, to me, failed breakout, just move on. And listen, you probably could have stopped out at break even, or maybe a very small loss. So let's say you entered this trade and you were risking this VWAP. It never touched VWAP until, 2 hours later and actually gapped down hard into a halt. But here's the thing. If you followed this advice after those 2 red 5-minute candles, if you did move on, you didn't endure that, look at that, $5 slam back after it touched the high of the day. So it keeps you out of a lot of that trouble. And those are the situations where there's that failed breakout. And again, defining failed breakout, look at this 5 green candles in a row. I mean, it just looks beautiful. It breaks the high of the day, then big candle to the downside, and 2 back-to-back 5-minute candles in a row. That is definition of failed breakout. So I would have stopped before VWAP, which ultimately, in my opinion, kept you out of trouble, kept the loss smaller, even though it's violating the plan. Then the last one is when the short-term moving average breaks through the long-term average. You hear a lot about 20 MAs and 200 MAs. This is a little more of what applied to swing trades. So if you're in that swing trade, swing trading is a little bit of a longer term idea, and quite frequently, based on the steady trade team methodology, I mean, we nail these earnings winners, these good news breakouts. And the nice thing about these swing trades that we look at, quite frequently, the biggest downside is they just kind of tend, and this is the downside. This is the ones that don't work. Okay. I'm focusing quite frequently, significant majority of the time, we nail these swings, but when they don't work, typically they just kind of start to go sideways. The volume goes away and they slowly trickle lower. Now with swing trading, you got a multi-day, multi-week methodology. And, it's down 1% a day. It's down 1%. It's down 1%. You're not getting crushed on this trade, and you're not hitting your stop. But when that 20 versus 200 average crosses, there's a lot of day traders that are watching that. And when that happens, you'll tend to see a gap down because people exit. So the best thing to do, if you're swinging, even if, and ultimately you may be making profits on these trades, because that's the thing with these swings. I mean, you might be nicely in the green, but then it just kind of slows down and the volume goes away. And let's say you bought a 100 break, your risk is 90 and your goal is 130. Let's just say a stock like Asana would be a good example of that. A stock that really just blew through 100 on earnings, and maybe you're risking down at 90 and your goal is 130, which looks like it wants it. But let's say here we are at 117. Let's say it just kind of starts to dry up and then trickles to 115, trickles to 114, trickles to 113. You're green on this trade because you're in at 100, but the momentum's gone and you got that moving average cross. Maybe you move on at 113. You made $13 a share. Not bad, but you're not waiting and letting your profits evaporate. So again, that's more of a swing trade methodology, which is something we talk about every strategy session in the Steady Trade team. If you're learning and really looking to get more involved in trading, I think the Steady Trade team is a great way to do it. Twice a day, every single day webinars. We typically focused more on, momentum day trades in the afternoon. Then we've got an afternoon webinar as well, where we're talking a little bit more of like those swing trade strategies. So if you're really looking to flesh out your trading and master this stuff, check out the Steady Trade team. I think it's a great way to do it. Have a great day, and we'll see you on the next video.